triangle and a channel. Hi, this is Charlie giving you Friday/Saturday's video. Now, if you remember from earlier in the week, I did a video on the S&P 500, looking at that being at a technical level, being at its daily 200, and it's still sitting around that as I speak, because these are important areas, and markets, when they get to important areas, whether it's resistance or support, then markets very often will have a think at those levels. So we'll see what happens with that S&P. It's having a think about it at the moment. I think overall it still looks like it could go higher, but there's, as we went through in the week, there's some certain sentiment which is getting a bit extremed there. But nevertheless, that's not what this video is about. This video is about the euro dollar, the biggest currency pair. And so let's go and have a look at the triangle pattern and a channel pattern that's in play. I say in play, but that's there on the euro dollar. So what I'm going to have to do is just make this a little bit smaller so that you can see this big triangle pattern. If I whiz this all the way back, there you go. This goes right the way back. Actually, on this chart, it's not quite. I think it's because, yeah, that's right. So you can see it goes all the way back to 1985, and before any of you clever clogs say the euro didn't exist back then, no, this is a composite I've got here, a composite chart. So prior to the euro coming into being, there were things like the French franc and the German mark and the like. So it takes a composite of that old data. Anyway, so we've got this triangle pattern which has been in play for a long time. I've been trading this pattern for a long time myself in the from late 2000, 13, 14, when it got up here. Now at this point, the triangle was, I say the triangle, but the upper trend line was slightly different. It was actually a little bit lower. I've since adjusted it, because that's what you're supposed to do with trend line analysis. As and when it needs adjusting, it got adjusted, because originally it was across here. So if I actually drag that down, you can see where that line was originally. The reason I've adjusted it is because subsequently I could leave that trend line there, and some technicians do leave them, but we can see that there's actually now been tests up here and over here, and so it warrants in this occasion a nice adjustment, because if I do that, then that creates some nice touches going all the way through there. Anyway, so that's how I've done it. It's not an exact science. It doesn't really matter. It's down to personal preference. Anyway, so here we are with this this triangle pattern, and again, even the lower trend line. I've got other charts where I start the trend line from here, from 2000 to 2001. I start it from these lows. We'll talk about why I don't do that. Well, I'll tell you why. We've already seen it, because this goes all the way back to this low back here. You see. So, but again, for those people who have got a different chart, they may only have the line starting from here. Now, if I had the line starting from here, I might as well put it on, mightn't I, actually? So if I draw that on, then the trend line is going to look a little bit different, depending on how I want to have it on. But I can have it here now. Now, if I put it here, where I'm crossing some of those lows from 2016, 17. I zoom it back in again now. You can see it's cutting through those. Then you could say, look, we have been below it, but we're still holding. Now, I personally now would have that across these lows, because again, there's an adjustment potential here. If I now zoom back in, because of the price action that's happened, I can adjust it, because there's been lots of indecision candles. Like I said, key levels, like I talked about the S&P earlier on, key levels, markets are going to have a think about it. Now, okay, the euro dollar, as we can see at the moment, is bouncing. This is the monthly chart, and it's having a good few days, I guess, of price action at the moment. But it doesn't mean anything in the grand scheme of things. This euro dollar may just be, again, having a think about it before it's ultimately going to go for a break of this long-term trend line, whichever way you put it on. I'll just take this one off now. Whichever way you slice it, maybe it actually wants to go for that breakdown. And if you'd have asked me just a couple of weeks ago or so, I thought it was really gearing up for that break. It was down below the trend line, and it looked like, if I take it now to a daily chart, it looked like it was going to penetrate this horizontal sort of support zone, multiple tests down there, and I thought it's only a matter of time before it actually then starts to go. But it's done a good turnaround, and so for now, the euro dollar is broken out of this channel that it's been in, this sideways channel range, and it's having a good run. But anyway, that's more about near-term analysis. That's not what I'm here to do today. So if we take this back to the monthly charts, let's start off with this triangle, and then we'll move on to a channel. So we can see there's this triangle. Now, like I've said, however you draw it on, like I've said, I've got other charts where if I actually take you out to a different feed, then you'll see my channel line is slightly different on this feed, just because I've got the channel line starting here, like I just said, from the 2000 lows, and I've got it crossing from these lows here in 2015, in which means you could actually have a slightly different interpretation, because you could say, well, if I take these lines off, it's just that line there off. There we go. Take that off as well, and there's a couple of lines on there that need removing. Oops. There we go. I can take this one off as well. Oh, got a few lines there. So you can look at it this way, and many of you will probably have this lower line on, and you'll say, well, we've already broken. We've broken the lower trend line here, and so whatever's happening at the moment is probably just a bounce, maybe to retest this line. Now, it had already broken it back here in 2019 anyway, and then came up for a retest, then has fallen off. And so maybe you could create an argument and say, well, that's failed so far because it's not followed through. But nevertheless, you could still say this could just be noise. Through all of this, we have broken the lower trend line, and that this is all noise and we're going to go lower. Absolutely fine. Again, it's open to interpretation. That's what all technical analysis is. That sometimes it's very clean, and this is pretty clean. But as you can see, even in when I've brought this chart up, this trend line is still going across these lows here, and I haven't adjusted it because we sort of breached through and then came back up. Of course, I can adjust it. So if I adjust this line now, because now we have a new interpretation, don't we? Like I've done up here, we can make a case and say, well, look, there's two. Those are two nice lows there. They're important lows. When you're putting trend lines on, you want to put them against points where there's a reaction. So we've had a good reaction off of that low. So that is more than justified. So again, there's a little bit of subjectivity to it, but there always is going to be, isn't it? It's an art, not a science. So again, depending on how you have your trend lines, you might be looking at it differently. So let's go with it that as it stands with these adjustments, that we are still in this trend channel, this triangle pattern. So we know that with these types of patterns, that the market at some point, whatever the market is going to have to break either to the downside or to the upside. As it currently stands, and as I've now drawn this line on, you could say, well, it could go either way. With the old way of drawing that line, if I adjust that back to where I had it against those lows there, if I can, there we go, about there, that'll do. Then you could say, well, like I said, we've already broken to the downside. But quite often with triangle patterns, you get a fake move. The first move is the fake out move anyway, is the fake move. So you could argue that we had it here when we broke the pattern back here. I remember trading through this in late 2016 or early 2017, and people were saying, oh, we've broken the trend line, the long-term trend line. Well, again, these things, they don't always completely happen, do they? You have to allow for overshoots, is my point. And we had an overshoot to the downside, so we could take out these lows only to then come back up. Anyway, so I'm going to put this back. So we'll just go with it that we've got this triangle, this lower trend line here. There we go. And the Eurodollars in this triangle pattern. Now, what I'm going to do is I'm going to invert my chart here. So I'm going to invert my scale here. Now, if I didn't know, and I always say this to myself when I'm doing my own analysis, if I didn't know, you didn't tell me what this chart was, and I looked at this. I've just inverted this. I've turned this upside down. The only thing I can't turn upside down is the actual colorings of the candles, because if this was inverted, the current candle would be red now, because it should be coming down. It's still colored it as green. Anyway, I've inverted the chart. If I was looking at this, and this makes absolutely no fundamental sense from a macro perspective, then and you said to me, Charlie, which way do you think there's the higher chance of a break, to the upside or to the downside? I would look at this and say, here's the steeper trend line. This one's the steeper trend line. Plenty of touches there. I would go with the downside break. That's how I would look at that, without knowing anything else, just because that's the steeper line out of the two. And the reason I just inverted it is just because you get a different perspective and you can see this line maybe in a different way than when I change it back to the way that it would otherwise be. There you go. So when I'm looking at a steeper trend line, then those are the ones that I'm looking for a break of. Like I've said, I'm not trying to justify this from a macroeconomic perspective as far as the Eurozone's concerned, and where the euro should be, or whatever. It's not what this is about. It's technical analysis. So I'm just showing you how I will look at charts and the things that I have to take into consideration. Okay. So that's the triangle pattern. Now, it could break either way, by the way, of course. And it could be that it breaks to the upside to disrupt this upper trend line, this trend line, and then just roll over. That could easily be what happens. That's what happens a lot of the time with triangles. So if it was to break out, doesn't mean to say it has to go on forever and make, come all the way back up to 130, 140 again. So it could just be enough to disrupt the pattern. The pattern's then gone, and then roll back over it goes. Or this is all just carrying on going to be noise, and what's going to happen here is that it's just going to carry on winding its way up within this triangle here before it goes for another break. Anyway, that's what we've got there with the triangle pattern. Now let's talk about, if I take it back to a composite chart, I use different feeds here, just so you know. If you see the feed here, it says FXCM. This is FXCM. It's not a broker. It is the FXCM's broker. It is one of their feeds, but FXCM supply different professional data feeds outwardly. So I don't trade with them, but I'm using their professional feed, which is very good. But sometimes it's useful to, when I'm doing big picture analysis on and I want to go further back on charts, is to just have a composite. So that's what I've now got on. I've now got a composite of data. So what that means is I'm getting up to about 50 different sources which are creating all of these price bars. So they're still going to be about the same, but there'll be small differences because some brokers will have slightly higher prices on any one given day than another, depending on the trading that's been going on their book. Anyway, so I've now changed it to the composite so that I can so I can take the chart back. Now let's talk about channels, and I'm actually going to now take you. I think we're going to. Oh no, not to a yearly. We're going to. We don't need a yearly chart. We're going to go to a quarterly chart. There we go. So now this is the same chart, but now putting it into perspective with it now on a quarterly chart showing this channel. So we can now see that, oh yes, that's what that triangle is that's building up, but we're also still very much in this channel range here. So we've come back down to the lower part of the channel here. It's not too steep. We've had multiple tests along the top up here over the years, but we're back down here again, thinking about it. But like I said about that S&P at its 200-day moving average, this euro dollar is really having to think about it down here. So is it going to bounce off this channel and go up a little bit, or is that it now and we're going to break down? I'm not here to tell you which way it's going to go. I'm just telling you how the things that I do within my analysis, so that I can consider these things based on whatever the price action's doing. So we've got a trend channel, triangle, should I say, on the monthly chart, and we've got this channel here on like a quarterly chart, which is again, you would say, well, we're off the lower trend channel line, and maybe we do go up. But either way, maybe we go up and then maybe we roll over. Maybe we do still just come straight down. And what's happening as I speak, if I take this back down to a monthly chart again, maybe this is just a little bit of noise. If I take this back into a zoomed in chart again, maybe what we're is happening right now is purely noise and nothing more. So I'm going to leave you with that today. 15-minute video, a bit longer, just doing a little bit more analysis there with you today, just to give you some general thoughts if you haven't looked at this market, because I do think the euro dollar, this is winding its way up for a big move in one direction or another. Food for thought for Friday. Have a wonderful weekend, folks. See you next week.